Hello, and thank you for joining us at xm.com for this Forex Preview video. We'll be having a look at the European Central Bank meeting coming up on Thursday and the outlook for the euro. I'm Christina Marujas. With me today is Senior Investment Analyst Marios Hadjikyriacos. Marios, the Eurozone has taken the brunt of the Ukrainian war and, of course, all its ripple effects. Inflation is soaring across the region along with energy costs, so ECB policymakers are expected to take action. Markets are expecting important announcements this week by the ECB, an end to asset purchases, and a signal for a July rate hike. The question is, though, how aggressive will the central bank be?
Hello, Christina. Well, my short answer is not really aggressive, but let's break this down. So, the Eurozone economy has actually been doing surprisingly well in recent months. Yes, we had this dramatic spike in food and energy prices. Normally, that should be really bad for the consumer, right? Because people now have to spend more of their income on necessities. Therefore, they don't have so much money to allocate on everything else. But we also had another force that managed to nullify this negative income, and that was pent-up demand. The lockdowns in Europe, they really ended at the beginning of this year. So the consumer had a lot of savings accumulated, and now they're spending down. They're using those savings to fund travel and just spending on services. So yes, we had some negative news, but the consumer and the European economy has actually been doing fine so far. Now, of course, not everything is rosy. Business confidence has fallen off a cliff. Demand for European exports is dwindling because Chinese cities have gone into lockdown. So, yes, the sun is still shining in a sense, but storm clouds are also starting to gather around Europe. And the ECB knows this. They know they have a relatively limited time window to raise interest rates and so on. So, what are they going to do this week? You hit it right on the head. They're going to end asset purchases. They're going to tell us that asset purchases will end at this month. And they are also going to prepare the markets for a rate increase in July. They have signaled this. They have telegraphed this move very well in advance. And inflation is raging, so most probably they are going to signal to the markets that yes, we are going to be raising interest rates next month.
And let's also have a look at the euro. How could it move on the ECB decision this week?
Well, here's the point of interest around this meeting. The markets took this message that yes, we're going to be raising interest rates, and they probably ran too far with it. So what I mean is, if we look at market pricing right now, there's around a 25% chance for a rate increase at this meeting, which is very unlikely to happen because it would violate the European Central Bank's own forward guidance. You remember, a few months ago, they told us we are going to end asset purchases, and after asset purchases end, we are going to wait a little bit, and then we'll raise interest rates. So, just raising interest rates before ending asset purchases now, it would violate their own forward guidance. It would diminish their own credibility, and I just don't think that they're going to do it. So the markets are saying there's a chance that happens. I don't think that's going to happen. So I'm looking for a negative reaction in the euro immediately on the decision. So that's let's say the initial reaction in the euro. The secondary reaction will depend on what President Lagarde says and whether she puts a 50 basis points rate increase on the table for July. So right now, the markets, we have fully priced in a 25 basis point rate increase for next month, a regular rate increase, let's say, and the market is saying there's a serious probability, around a 35% chance, that it's a bigger 50 basis points move. So are they going to put it on the table or not? Depending on the answer, that's going to shape the euro's overall reaction. I don't think they're going to do it. Well, I just don't see any real benefit from signaling huge moves. So if you are raising interest rates with brute force and you are telling the markets, yeah, we're going to do 50 basis points at our first rate increase, and you are ending asset purchases as well at the same time, that just risks generating panic in the bond market. And that's not what you want to do if you're the European Central Bank. The last thing the ECB wants is to have to choose between fighting inflation or having to save the Italian bond market from a crisis. So slow and steady is the message that I'm looking for, is the message that I think the ECB is going to try to hammer home. And that, I think, is going to come as a disappointment for the euro, considering where market pricing is right now.
Marius, all eyes will be on Thursday's meeting. Thank you so much for joining me today. And thank you for watching this Forex Preview at xm.com.